All right, good afternoon, everyone, and welcome to Money Matters. Let me know, how are you guys feeling today? How has this week been for you? A little bit of update. I think for us here in Malaysia, we had a long weekend. I think previously last week, and a lot of people were on break for the past 1 week, and I think this week has been the week where we come back from the break and realize, oh my God, my momentum has gone down and I have to rebuild back my momentum. So that has been going on for the past 1 week. It has also been a very, very interesting week. One of the reasons I chose today's topic as um, the very, very, very interesting topic on what you should know before taking up loans. The reason I chose this topic is because I've been hearing a lot of people talk about this topic over the past month or so. I've heard of plenty of people who have been struggling with their loans. Some of them are finding it hard to pay it back. Some of them were not aware of the effects not paying loans would bring up. And it has been a very, very interesting experience to meet all these people and have conversations with them and kind of see what are the things that they missed out with regards to taking up loans. If any of you have read my book, Money Matters, you would also know that, like I mentioned in the book, one of the things that really taught me or really got me started to think about personal finance is basically my car loan and how I dealt with it, how I was so not interested in learning more finance or whether I was managing it well at all. Until had to start paying back the car loan, and I realized whatever I earned just went into paying off the loan, and it was extremely stressful and not at all something I would like to experience again and again. So that is what got me to start thinking hey, am I saving enough? Hey, am I allocating my funds appropriately? Am I just going into loans because it's something is interesting right now? I started thinking a lot about money after I got into that car loan. So I think a lot of people actually do the same thing. A lot of them will start looking into their personal finances and their habits and all that when they start facing some difficulties in their finances, especially if it comes through some of these loans. I think a lot of them have personal loans, there's car loans, there is house loans, there is student loans, there is credit card loans. And I think some people have loans as in you borrowed it from your friends. There are people who would kind of pledge your gold and jewelry to kind of get some money, and then now you have to pay that back. I think a lot of people have experienced these different types of scenarios, and many times we go into that scenario because we are in a situation emergency and we are not able to find solutions to it, and we enter the loans. Or we are really blur, like me, who just wanted to get a car and was super excited about it, and then you get into the loan, and then years later you start thinking, what have I done? So I thought today would be interesting to talk about what are the things we should know about, or what are the things we should at least start thinking about before we go into a loan. But before we go into that, I'm very curious to know what your experience has been with loans. Are you someone who doesn't like loans, or are you someone who is, I don't think anybody likes loans. Maybe there are. Okay, I shall not form opinions. But are you someone who likes loans? Are you someone who doesn't like having any kind of owing to anybody? Or are you someone who is something like, I have no choice. I have the need to take the loan, so I'm going to take it. What is your perception on loans? Drop it in the chat box so that we can see. I think today would be even more fun if those of you who are tuning in live right now can actually drop your comments, and we can see what are the different perceptions that people have. And of course, if you're watching, you can also share the link out to your friends and family who may be going through some difficulties with regards to loans and credit, and yeah, let them join the conversation, and hopefully we can find some solutions for that as well. So while you guys come up with some thoughts on what you feel about loans, I'm just going to play a very, very quick video on the book that I've written and give you guys some time to type out the answers. All right, so I see some answers coming in. I don't like to take loan, but now have the need. Yeah, I think many people go into it not because they like it. We all have quite scary perceptions. Many of us have scary perceptions with regards to loans, but we go into it because there's a need for it, and that's why. And then they keep going into it because there's a need for it. So I think one of the things that I feel many of us should know about before taking up the loan is what is the consequences of taking this loan in the longer term. I think many of us look at it when we are in an emergency situation. We will be like, oh my God, I have no money right now. I need to do something. Let's take a loan. Let's sort it out and fix this problem. And it's very in the now kind of situation. Whatever is going on around us, that's all we are thinking about. But very few people actually look into like, okay, I will solve this current problem, but because of this loan, these are the other things that are going to come up over the next few years. Very few people actually look into those future consequences and then study that as a whole thing. Like, okay, so now I may solve this problem, and then 5 years, for the next 5 years, I'm going to be paying out this particular amount as my installment. That would mean for the next 5 years, this certain percentage of my income is going to go for the loan. They don't look at that. They just look at, I'm going to take the loan now to solve this problem. And in our minds, it will be like, yes, we have achieved our goal, we have solved the problem, we are back to good financial situation. But we tend to forget that, hey, you are stuck with the commitment for the next 5 years. I think one of the things is like, for example, that's how many people go into personal loans, right? You don't have your, let's say there's a medical emergency, you don't have savings, you have no choice, but you have to take the loan to kind of like cover your medical bills, and you have covered it. But most people are like, okay, we have covered it and it's done. And then they forget that for the next 5 years there's going to be repayments, in the sense that some people forget to pay the whole thing, like they don't even pay the installments, or they delay on it, or they it's there, but in their mind it's not really an issue because the current issue has been solved, and that's all that matters. So I think the first thing that anyone should know about is really put down the numbers and see for the next however many years. I think for a house, if you are purchasing a house, it's going to be 20 years of mortgage, or 30 years even. Some people actually take 30 years loan. So you could be a 30-year-old right now. Until you are 60, you're going to be paying your mortgage. So put it down on paper and really see what is going to be happening for the next few years, next 20 years, and what effect it will have on your every other goal that you have. And then decide whether there's something you're okay with, or is there something you'd like to change about it. So I think like many people that are recently, I've been having some of my clients who have credit card problems, right? So they're like, I need to pay this expense. I got no money. It's going to take my credit card and pay for it, and done. So the moment they're done with it, they go into the zone of, okay, I've solved this problem. I needed to settle this bill. I've settled it. I'm done. But they forget that, hey, because you've done that, now you have a credit card amount of this certain few thousands, and now you have interest that is going to pile up on that amount, and that's the consequences that you're going to have for the next few months. Is this, are you okay with this? They don't look into that. So that's the first thing that I think anyone should look into. And number two is, of course, interest rates. There's many people I know who have taken a loan, but they don't know there's something called interest rate, which is quite concerning, but I think it's important to learn about. So if let's say you take a 50,000 loan and the bank gives you 50,000, they're not going to say, Madhura, keep the 50,000 ringgit. I don't just pay the 50,000 ringgit back to me. They won't do that. Because they're giving you the money, there's some form of charge that they will be putting towards that. So that is what interest is. So it could be any percentage. It could be a 0.5% interest. It could be a 1%. I mean, 0.5% is unrealistic. 2%, 3%, 6%, 8%. It could go to any range, and of course, the highest interest rates are usually for credit cards. And the lowest ones, I think, maybe if you're Malaysian, you would have a PTPTN loan, which has some of the lower interest rates. So, but they still have an interest rate. So, if you took a 50,000 loan and you have a 1% or a 1% interest rate, you're still gonna have that amount, that interest amount there, and you're gonna not only pay your normal loan, you're also gonna be paying the interest every month. Hence, why some of the people I know, they'll be paying their loan and they'll be like, "Yeah, I've been paying, man. I've been making progress. And then I'm like, great, let's log in to your online portal and see what's the current balance. And then they log in and they see, why is the loan still the same amount? And that's when they realize that all that they have been paying all this while is just interest and nothing more. I think one of the clients I work with has a housing loan that they're taking up, and it's the beginning stages of it, as in the house is not fully built yet, so the loan has not fully gone out yet. So whatever that person has been paying is just purely interest and nothing more, which is very, very interesting to see. So for them, it's like, oh, I've made so much of payments and I've done all of this. But when you look at the amount, they're still making interest payments, not the full loan amount. So you got to know about your interest rate. You got to understand, if you have a loan, your loan is not just what you took out, but also topped up with the interest. And there's two types of interest. There's the fixed interest, and then there's the variable interest. So you got to know the difference, which one is your loan under. You got to know whether they've already included it and then divided into the period of the loan. For example, if let's say your loan is 50,000 and the interest is 5,000, so they take the 55,000 and divide by 5 years, let's say. So in a year you have to pay 11,000 ringgit, or in a month that's about 900 plus ringgit every month. So you look at that, oh, they have already included the interest, so that's that. But there are some loans which they haven't included. They add on the interest as the time goes on. Every month they add the interest to your account. So you may think you are making progress, but actually you forget that the big chunk of amount that is being added to the account, which is the interest rates, is not in your mind, it's not in your calculations. So you got to know that. And of course, recently Bank Negara increased the rates. So if your loan was a variable interest rate, variable means changes, right? So if it changes, you would be affected by changes like recently where the Bank Negara increases the interest rates. So your loan would also have a higher interest rate in a way, and that is going to definitely affect you. So understand interest rates. That's the next thing I would tell anybody. Like, know what's your interest rate, understand what it is doing to your loan. As long as you get a brief picture on what is it about, that is good enough already. And two is the how long you're going to be paying. I think a lot of people get very excited, especially youngsters like us, get super duper excited with the fact that we can get zero down payment and freaking long loan, like 30 years loan. This is brilliant. Let's buy a house with no down payment and 30-year loan. And for us, it sounds like a brilliant idea, because at our current financial status, we cannot buy these things. It's too out of our budget. But if I don't need to put a down payment, I can pay this loan for 30 years, and it's going to be great. It's such a great achievement for me. But I already have a house. That's how a lot of people think when it comes to these kind of payment plans in a way, which is also kind of scary, because the longer your loan is, the higher the interest rates will be. And sometimes just a 10-year difference in the mortgage can kind of like make your loan like double the value sometimes. So you have to know what is the difference because of how long your loan is. So if you, because you took a 30-year loan, are you paying 100,000, 200,000, 300,000 more? If yes, is that something you want to do? Do you just want to give away money to the bank because you can? Do you want to do that? I think that's something to look at. And of course, the down payment, if you can put in more of the deposit, your loan is going to be much lower, lesser interest will be needed. So do you want to delay your house purchase or car purchase or any other purchase, so that you can put in a bigger deposit amount and keep your loan at a lower amount? So these are some of the things you need to know about: down payment, interest rates, the period of the loan. How is it affecting you a lot? If you're not very sure, meet somebody who can explain it to you and then make a clear decision. Don't just go for those things because it is being asked of you to go for. Recently I spoke to somebody who is in a field where he does not yet have a fixed income, and it's a very variable income, and his variable income is not at a high level variable income. It's at a low level where he's barely able to cover his expenses on a monthly basis, but he is already receiving pressure from his family to purchase a house, because at his age purchasing a house is important, and he's already starting to get the pressure from his family members. And he was like, should I go and get the loan? Should I just buy the house? And it may look like you solve the current problem, which is the pressure from the family, but you will then doom yourself to a long era of issues. So putting it down and seeing the numbers help that person to kind of like go like, okay, maybe not now. I need to get more things stabilized to be able to do it. So those of you who are watching, let me know if you have kind of like learned about any of these terms after you started the loan and you go like, oh my god, why did I not know about this when I first started? And I'm just curious to see, I guess, someone who missed out the interest rates or the deposits or any of those things, and what was the experience like when you started figuring out what is this all about. All right, so as you guys drop your answers, I'm gonna like bring up one of my, I think, the favorite topic that everybody has been talking to me about, which is student loans, especially in Malaysia, where it's called PTPTN loans, where many of you take it from PTPTN. It's very very interesting because in a way it is quite low interest, and it is something very important. I think many of us look to further our education, and having this loan gives us the opportunity to go for our education and really get the education that we need. So it's not really something like, oh, I decided to splurge and decided to buy this fancy car. No, it's something important for us. So it's not really necessarily a bad thing. But it has been interesting because after people are done studying, so for example, if you go for a 4-year degree and you have done studying, then we forget that we took up this loan and we go on to our working life and all of that, and for years have passed. So I recently met a few people who have like, they have worked for 3-4 years, they forgot that they took the loan. uh, they know it was in the background, they know that they did take the loan, but they didn't really do anything about it. Few years later, they go back to the office and find out that, hey, you have not paid your loan, hence you have been blacklisted because you have not been making your installment payments. And that person goes like, but nobody told me I need to make this payment, which is something I've heard a lot from a lot of different people. So like, I didn't receive any statement, I didn't receive any notice saying like, hey, I need to start making payments and all of that. And now that they are blacklisted, they are not able to get any other loans. They are not allowed to travel outside the country. Um, and they have this big lump sum amount that they need to make payment before they're able to go back into an installment plan. So things have gone horribly wrong for them because there's so many different things to worry about. So now, this is where they go like, oh my god, why did I not know about this? So that's one of the things I thought we could share, which is the consequences of not paying your loans. Many of us don't really think about it. We don't think about, hey, what happens if I don't pay it? We don't actually know what happens if we don't pay it. So if you are planning to take up a loan, it could be credit card, it could be a personal loan, it could be a student loan, it could be a hire purchase for your car. Go and find out what are the things you will face or encounter if you forget or miss an installment payment. For example, if you continuously miss payments, of course, the other thing that will get affected is your credit score. You guys can actually check out the credit score episode under Money Matters, where it will actually get affected if you don't make your monthly payments. And if that gets affected, a lot of other things also start getting affected. For example, your ability to get other loans. So understand what are the consequences of not paying up your loans. If I've heard of people who have credit card loans that have accumulated to a point where they cannot pay it back. It's so big, it's so scary, and it just keeps growing exponentially. And they have to kind of like go to the banks and all to sort it out as well. So understand the consequences of not paying up your loans. Now, to avoid going to that extreme of not being able to pay, if you can do this study before you take up the loan, you'll be able to make a decision on how much you can risk taking. For example, if you earn 1,000 ringgit salary, which is quite low now, the minimum wage is going to be 1,005. If you have a 1,500 ringgit salary, 50% of your salary is 750. Even in taking up a 50% of your salary, like if there's a loan payment monthly for 50% of your salary, it's very dangerous in the sense that if anything goes wrong to you, to your job, to the company you work with, to your ability to earn, you could have a medical emergency and be bedridden for 2 months. It could be anything, but if anything goes wrong, you will not have the ability to make those monthly payments. So keeping the loan amount in your regular monthly expenses is very, very important. So some people prefer keeping it at 20%, some people prefer keeping it at 30%, but fix a percentage that you feel you won't freak out if things go wrong. So I think if let's say you take 20%, but make it a habit to pay 30% of your income for the loans. So let's say your loan is 250 ringgit every month. Try to see if you can pay 350 ringgit, 400 ringgit every month for your car, for your loans. That way, you have a higher capacity to pay, and you'll pay it off much faster as well. So, but you won't know whether you can do this or not until you study the fact of what will go wrong if you don't pay. What is that, like the minimum and all those things. You have to understand what the loan is all about before you go into it. So these are some of the things that you should know about when you take up a loan. How the loan works, that is very important. Two, what happens if you don't handle the loan well, and decide whether the risk you're taking is worth that level, whether the amount you're going to be paying as a monthly installment is worth that risk. And if it is, if it's an important risk, then go for it, but be prepared. Number three is, of course, be prepared. So what do I mean by be prepared is, don't think that your life is going to be great all the time, because it won't be. It's inevitable that we all go through ups and downs. So that is where you keep aside some savings to be able to handle emergencies. So let's say a lot of people lost their jobs at the beginning of 2020, when the pandemic hit and a lot of businesses shut down. I personally know people who lost their jobs, but the loans don't stop there. The loans continue being needed to be paid. So this is where people who had savings did not lose their credit scores or suffer in those elements because of losing their job. They just took their savings and made those payments. So always have emergency funds available for you to cover these kind of emergencies when they come up, and pay off your loans when they come up. So when you calculate emergency funds, don't just calculate, oh, I eat for this much per month, this is my groceries, so my emergency fund for a month is just 800 ringgit. No, it needs to include your loan payments as well, because those happen every month. And just put those together and then calculate your emergency fund and start saving those up as well. So know what happens in the loan, know what happens if you don't pay the loan. Understand, I mean, take lower risk. Don't, a lot of us take loans when we're feeling a bit good or very excited for the prospect of the future. For example, when we buy the house, we are super excited in living at the house, or like the investment returns I'm going to get because I bought the house. When we buy a car, like I remember when I got the car, I had no care at all for the future. I didn't worry whether I would lose my job, or I didn't worry whether there'll be any emergencies. I was just excited that I'll be driving down my car in the highway. And that's all that excited me. So many of us make decisions when it comes to loans with a lot of optimism for the future, which is not wrong, but balance it out with some realisticness, and like put some worst case scenarios and see whether you can manage that scenario. If yes, go ahead and take up that loan and all of that. And number four is, if you have gone into that really bad scenario where you have not paid your loan, you're suffering and all of that, it is extremely hard to kind of like step out of it, which is where you need to find help. And when people give you help, try to follow the instructions. So for one example is, if you have been someone who has missed out your loans, you're getting blacklisted and all that stuff, approach maybe AKPK, where they actually specialize on helping people to restructure and come out of these kind of problems. However, when you go there, you cannot just like, whatever plan they prepare for you, you cannot just leave it and say, hey, I don't feel like following it today and I'm going to go back. No, if you do not follow it, you will not have the ability to redo it with them again. So find solutions, maybe talk to the bank managers, talk to AKBK, or talk to your financial advisor to figure out how to solve that problem and take actions on making it happen. And don't give up until you do so. It is scary for sure. Hence why you are probably in that situation, because it was scary earlier, but it's not going to change if you do not take a different action. So if you are someone who is going to take up a loan, also learn about these other options. Like, if things go wrong, what do I do? Learn, educate yourself ahead, so that when that scenario comes, you're not in complete shock. You're able to find solutions quickly and come out of it. So these are some of the things that I work with with people. Many of my clients who are working with me on personal finance, they are just entrepreneurs, they're just they're employees in companies. But many times when we work on our finances alone, we tend to be biased. We tend to, if we have certain mind blocks, we tend to not come out of it. So if, let's say, my mind block is credit cards, and whenever there's an issue in credit card, I just ignore that issue. I do not want to see it. I just look, oh, okay, that's okay, great, my credit card is giving problems again, I'm just going to ignore it and move on with my life. Many of us tend to do that with our financial issues. So what we recommend is having somebody to help you, so that even the areas you tend to ignore, they can help you address it and come out of it. Number two is, we will say we want to be financially independent. We want to, you know, I think there's a group called Retire Early and all that, right? You may have goals that you say are your goals, but in the day to day process, we may forget or take actions which bring us further away from those goals rather than closer to the goals. So, having somebody to guide you in the process will ensure you stick to your goals and make things happen and simplify those things, so that you don't overcomplicate, overthink, and make yourself get into a bigger problem. So, if you are looking for help, approach people who you feel have been able to manage that, and have been able to guide other people to manage that. One of the things I do is I work with young adults to manage this as well. So if you are a young adult, you can definitely approach me. We can have a conversation to see whether we would be the right fit, and basically work on your personal finances together. Get the basics right, get our mindset right, fix all these other things, so that you can eventually go so much more in your personal finance journey and achieve all the goals that you want. So the other thing, of course, you can also do with regards to money matters is continue following different topics on money matters. I think previously we did a topic on credit score. You should definitely check that out. They will explain how people decide, how banks decide whether to give you a loan or not, which is very, very important. You can check out that episode. I think we have had a few other speakers who spoke about how they handle the issue of them managing their loans. We have had all kinds of different topics. If you're a business owner, how business owners manage their cash flows, how to manage giving, how to manage teaching your kids financial literacy. We've had all kinds of speakers. You can join our Telegram group. I'll drop the link in the chat box in a while more, where you can actually learn from speakers in various kind of backgrounds and see how they have managed their personal finances and their business finances as well. I think other than that, you can also get my book. We have the physical book available in Malaysia only, and then we have the ebook and audiobook, which is available worldwide. You can get a copy of it at www.ascendancepro.com. You can also join the community for Money Matters at this link as well, dropping it in the chat box. Yeah, I want to keep today's episode simple and to the point. If you have any questions, drop it in the chat box. We can answer those questions, and see how we can help each other. If you are looking for some personal help, something more personalized with regards to managing your loans and all of that, feel free to contact me. You can also check out a few other episodes on money matters with regards to the loans. I'll drop some of my recommendations in the Telegram group. So join the Telegram group. Sometimes we share some ideas there. Sometimes we share some articles there. You can read up on those and kind of educate yourself in this topic. So yeah, thank you so much, guys, for joining Money Matters. Hope you had fun listening to today's sharing. A very quick one on loans, what you should know about it, what are the things you should learn about. There's plenty more to learn about. There's so many different things. Each loans are complex on its own, and the tips and tricks for each one is different. We will bring up more speakers who can specifically focus on each area. So if you are looking for something in specific, also recommend some topics in the Telegram group, and we'll definitely find speakers who will be able to address your concerns in that. So that's all for me today. Thank you so much for watching, and see you guys in the next episode.